All right, here's how a tax sale works in South Carolina. South Carolina is a great place to buy tax sale properties. You can often get some really terrific deals there, and it's a really interesting process, but simple. Here's the way it starts. If the real estate homeowner doesn't pay their taxes by January 16th, then the property is going to put that property up for a tax foreclosure sale. And the way the tax foreclosure sale works, it's an open voice auction. So people go down, they can bid, high bidder wins the property. And often properties are sold at really great prices. So people are going to get a property for 50, 60, sometimes 70 cents on the dollar, which is really terrific because you get a terrific property at 30, 40% off. That is great. So there are a couple of sort of catches to this process. The number one catch is that the homeowner has 1 year from the date of the sale to redeem the property. Now, what does that mean? Redeeming the property means that they come and they pay the taxes, they pay the penalties, they pay interest, and then if they pay everything, then they get to keep their property. Now, you as the bidder are going to get what you paid plus interest. And the interest is going to range somewhere between 3 and 12%, depending how quickly they pay you back. If they pay you immediately, it's 3%. If they pay at the end of the year, it's 12%. So if they do happen to redeem, you're going to get some interest on your money and you get your money back and it's all fine. But for those cases where you get the property, it's really terrific because you get a great deal on the property and pick it up for literally far cheaper than you'd ever get any other way. And you could perhaps flip the property, hold it for a rental, have it as a place to live in. So it's really terrific. So some other sort of catches to this way of acquiring properties are that, first of all, you have to wait a year and you can't do anything with that property for the first year. You're not even supposed to set foot on the property. So if someone's living there, they get to still live there. If the old owner is still there, they can live there. You can't bother them. If they haven't rented out, they get to collect the rents because you aren't the owner yet. You aren't the owner until a year passes after the tax sale and they still don't pay you. Then they're going to issue you a deed and you become the owner of the property. So you have to wait. The property could decline. I mean, it could have problems between the time of the sale and the time you're going to get it. Nothing you can do about it. That's just a risk of being in this part of the business. Also, if there are any IRS liens that are registered against the owner, then those are going to be liens on the real estate. They last for 10 years from the time that IRS lien is recorded, so you do need to check that out to see if there are any liens on it. The other thing is that these sales come with no warranties or guarantees of any kind. They tell you what the property is you're buying, but it's up to you to decide, what kind of condition is it in? Is there anybody living there? Is it in a desirable place? All they do is tell you what property is being sold with absolutely no guarantees or warranties of any kind. And sometimes properties sold at tax sale have no value at all. And that can come because it's just a little orphaned strip of land that's from a surveyor's mistake. Could be a drainage swale or a drainage ditch. Could be anything. So you need to make sure before you buy any properties at a foreclosure sale that you have driven by each property that you're going to bid on and make sure that you really want it. Also understand, most properties are going to be redeemed. If someone has a valuable property with a lot of equity in it, they're probably going to go and pay off those taxes. Now, you're going to get interest, which is good, but you're not going to get the property. So just keep that in mind. Don't expect that just because you bought, you're the successful bidder at the sale that you're necessarily going to get that property. That's not the case. Usually they do pay off those liens. Now, if you're looking for ones where they're not going to pay off the bid, look for ones where the property is vacant. Look for ones where the owner has passed away and there's nobody, there to redeem the property. So that's more likely. But again, this is more a game for interest than anything else. But every once in a while, you're really going to hit it out of the park because you're going to get a property at a really cheap price and it's really great. There's another thing you can do in South Carolina, which is called overages. And overages are where the property sells for more than the amount that's owed in taxes, which happens all the time. You can imagine if it's only a year's worth of real estate taxes, that's probably 2% of the value of the property. So whatever it sells for is going to be far more than that at the tax sale, usually more like 60, 70, even 80% of its value. So there's typically a big spread with tens of thousands of dollars available. Well, the former owner qualifies to go and claim that money. So you can contact the former owners, offer to claim the money for them for a fee. Now you might say, well, why would someone do that? Well, a couple things. First of all, they rarely have any idea that there is any extra money that's available to claim. They don't know where it came from. You're not telling them where the money came from. You're just saying you found money that they're eligible to claim. Very rarely would anybody know where this money was or how to deal with it. Also, the people are pretty afraid of the government at that point. If they've had their house sold out from under them, they're typically pretty afraid and not ready to take on the government. So you do that for a percentage of what you recover, if anything. Really good business. One thing in South Carolina you need to be very careful of. There's something called the Family Privacy Protection Act, and you can look it up. It's a short law. It's only 2 paragraphs. Essentially, it says that you're not allowed to use the public records as a marketing list. What that means in this business is you can't use the public records to look up properties that sold a tax sale and then use that to contact former owners. What you have to do if you want to do this properly is you need to either send someone to the sale itself, meaning send someone to the foreclosure auction, or go there yourself, write down what properties sell for, compare that to the amount of taxes that were owed. That will give you the overage amount, and those are the ones that you go after. There are some people who teach the overages business that I saw it for myself and I couldn't believe it because it's such bad, inaccurate advice. They were saying you could go to commercial list providers and get the list from them. You cannot do that. You cannot get the list from someone else who got it from a public source and think that that somehow washes it clean. Absolutely not. You cannot do that. So don't follow that advice. I'm an attorney. I know the law. I look up the law. So please, if you're going to do overages in South Carolina, you just want to go to the sale, write down the ones that sell for a lot, and go after those, and you can make a ton of money with it. I love the overages business because you're helping people. These are people who have lost everything. They've lost their house. They've lost their hope. And you can be the one that gives them new hope, gives them a big slug of money that they had no idea existed, and helps them get restarted. I've helped people in this business who were homeless, literally, because they lost their house. I gave one lady $32,000 at a homeless shelter and got her out of there and got her back in life again. Today, she's fine. Today, she works again. She has a regular income. She's not just in this deep depression from losing her house. And that's the kind of difference you can make in people's lives. And it really is pretty amazing. The other thing about overages, it works all over the country. And most places don't have the Family Privacy Protection Act, other than South Carolina. That's the only one that has it. So in overages, we just get lists from the regular county governments. We look up the contact information for the people that own the house, reach out to them, give them the news. There's some money they qualify for, see if they want to work with us for a percentage. Some of them do. And when they do, we make great money and we do great work. So if this sounds interesting to you, 2 things we talked about today, obviously the tax sales plus the overages. If you want to know more about overages, go and watch the Intro to Overages video. There's a link to it up there. There's also a link down below. Just click on that. We'll spend 15 minutes together. I'll give you the rundown on this business, and this may be the business for you. It's pretty amazing. If you want to do the tax deed auctions, then go and do them. Get the list from the county and go to those sales and pick up the properties. Now you're going to have to wait a year to actually take possession of the property, and that sometimes you won't, well, most of the time you won't get the property, but you get a nice rate of interest. Still good. And by the way, you get interest on your entire bid, not just the amount of the taxes, so you get it on your bid. So that can, be good income for you, and it's a clean business. You don't have to deal with the homeowners. They're not paying you. They're paying the county. County collects the money and the interest, and they forward it on to you. So it's a very passive business, and a business that I like. If you want interest, if you want properties, then go to the tax deed sales. And if you want to get lump sums of cash, go check out Overages. This is attorney Bob Diamond signing off for now. Click on the link and I'll see you over in the Intro to Overages video.